All right, so hello everyone. Thank you so much for supporting us for the webinar tonight. We hope that you have an enjoyable trading journey week. So hello to Chandrakan, long time no see, and Yasin Slali, hello to you. And Audie Jackson, hello. I'm fine. Thank you for your concern for Chandra. Today we are going to discuss things about the trade war, one of the very important market catalysts that you guys must be understand, and it's our duty to make sure that you guys have an understanding on what's going on in the markets recently. So this is a major things that you guys must be understand, and then you also need to trying to like using the fundamental, and maybe you can see how can you trade in future. In today we are going to discuss about trade war, one of the very important things. So almost hello. Shout out to Sudan. Bonjour Fabrice. All right, I think we are going to wait for 5 minutes, wait for more people to join us first before we start the webinar tonight. And meanwhile, if you guys have any questions regarding on trading, such as if you guys need some of the analysis for the gold, some of the analysis for the BTC, you can also type in the chat box. I will try my best to answer all of your questions while we're waiting for most of the candidates to join the webinar tonight. So we hope that you have an enjoyable journey. And then the goal recently is actually quite tricky. I'm not sure whether you guys have experienced the roller coaster or not. Later we are going to cover on it also about some of the goal movement and see how can the trade war is going to affect it. Then we also cover something regarding on the equity markets, like recently the movement, what can we do next? And we're also going to talk about things such as crude oil, or maybe asset classes, including the Bitcoin, what to expect in the future. All right, so I think most of you guys already here. So without wasting any time, we are going to start our webinar straight. And before we start, here is a small risk disclaimer for you guys. This webinar is for informational and educational purpose only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instruments. Trading CFDs and other leverage products carries a high level of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposit. So it's important to fully understand the risk involved before engaging in trading. While we discuss market analysis and trading strategy, these are purely for educational purpose and do not guarantee success. By participating in this webinar, you acknowledge that Pupra and I are not responsible for any trading decisions you make or any losses incurred as a result. So now we are going to start the things, very important things that everyone needs to be understand. The trade war since 2024 and 2025, what's going on, what is the timeline, and how is it going to affect the global financial markets. So at first, we are going to discuss on how is it start and where we are right now, what is the situation right now, and what should we consider to trade. And this is a key highlights that we are going to discuss today. First thing to answer most of the new joiner, new traders about is what is trade war. And then we will let you understand in 2025 until 2024 until 2025, what is the potential trade war timeline and why is it so serious that everyone needs to be understand. And then we also cover about the trade war triggers and why is the trade war is going to make the global financial crisis happen. And then we'll show you some of the economic impact. And then of course, we will also show you some of the analysis charts to let you understand, briefly understand what's going on and how to trade. So first thing, understand trade war. So what is trade war? Trade war occurs when countries intentionally impose economic barriers, usually in the form of tariff, quotas, or sanctions against each other's import and export in an effort to protect domestic industrials and punish foreign trade. So to explain in the layman's term, this is something that another terms of war. So for example, the countries, they want to punish other countries. It is going to impose more tax on them. For example, if I want to sell something from Malaysia to Singapore, I need to pay. If Singapore, the government impose a lot of tariff on me, I need to pay more taxes to the government if I want to sell something to them. So this is something very, very serious. Every time I want to sell some of the products, the government will charge me with a higher prices. So the government charges, or what we call as a tariff, is something that tax on imported goods that make them very, very expensive. And then this tariff is actually going to cause a lot of countries to fight back and retaliations happen. This is what happens right now. Recently, if you guys have been noticed the news, US just imposed more than 100% of tariff target on China. And then China is actually respond back the same thing, 145% of tariff targets back on the United States. So this is a very, very serious situation right now, because all of this tariff means that when I want to sell something to China, or I want to sell something to the United States, or both countries want to sell some things to each other, they would need to pay extra more than 100% of costs. So worst case scenario is, for example, if US want to sell, if US want to sell iPhone to China, the prices of iPhone will increase by around 100%. This is something that happens right now. And this is why a lot of countries start to fight back. And then this trade war is going to affect more trade disruptions. Supply chain disruption is going to happen, and the stagflation is going to happen, which we are going to further discuss later. So now let you have a brief understanding on historical trade war. So trade war is not the first time that happens. And we also noticed that in 2018 until 2020, before COVID periods, US and China have been launching the trade war before. And then they have a lot of discussions. They have like phase 1 trade deal, phase 2 trade deal, and then finally the trade war have been in. But they end the trade war is mostly due to the COVID-19. So afterwards, trade war, nobody is going to discuss on it. All of the government fully focus on how can they revive back the economy after the 2020 COVID-19 financial crisis. And then another thing that tariff happens or trade war happened is 1930s. So Great Depressions happens during that period, and US government is super poor. They don't have much money. So indeed, if they want to boost up back the economy, they need to earn more money as a government perspective. US government decided to charge a lot of taxes to others country. So this thing is going to cause tit for tat. And others country is actually going to fight back to the United States. And even that period, Great Depressions do not become better. One of the very super serious financial crisis, Great Depression, 1930s. So the tariff is not going to help the economy, and even it worsen it. So at that point of time, 25% of people are unemployed and they don't have any jobs during that period. And then we also do notice that US and Japan during 1980 to 90, they do also have some of the trade war tariff implementation, but this is a small thing, so we don't discuss much. So as a conclusion, trade war is something going to trigger higher consumer prices. When higher raw materials that happens, a lot of tax have been imposed. Raw material will become more expensive, and this is something going to also cause all of the consumer prices increase. Everything that you want to buy, the prices going to be increased sharply, and it's going to disrupt the global supply chain. So for example, if I want to build some of the products, for example, I want to build iPhone, I need to import different chips from different countries, maybe battery from China, chips from maybe Philippines, for example. So when tariff have been implemented, all of these raw material that I need to make the iPhones, the prices will be increased aggressively. So as a company, as an Apple company, my company costs will also increase. It's going to affect my profit. So when a lot of companies suffer the same thing, a lot of companies going to suffer, and this should be one of the main issues that happens. And later, we are going to discuss more about the latest trade war on what's going on and how is it caused. You guys remember that the trade war after in 2025 is actually triggered a significant market meltdown. The Dow Jones, Nasdaq, and all of the high-risk equity index dropped more than 10% within just a few days. So this is something that scary things happen, and we are going to let you guys slowly understand everything. So after you understand the historical of trade war, now we are going to discuss about the latest trade war timeline. So the fears upon a trade war is during the US elections, November 2024. So Donald Trump is actually re-elect as a president again, US president again. And then he actually mentioning that if US President Donald Trump, if Donald Trump becomes the US president, he is going to impose a massive tariff target on China as well as other countries. But that time, everyone think this shouldn't be a very, very serious thing, because by that time, Donald Trump might not be able to win as a US president. And then by that time, they expect Donald Trump might be focused on other things. Maybe trade war should be the next. But things become more and more serious, because during 2025 February, US start to strike a lot of different countries. First country have been suffered is Canada with 25% tariff, Mexico another 25% tariff, and China during that period 10%. This is something super serious, because now things become serious, because Donald Trump really going to impose the tariff target on multiple countries. And then afterwards, Trump also mentions that if this country and a lot of countries do not negotiate with the United States, he is going to impose more and more aggressive tariff, and there is no joke. During early April, US President Donald Trump is actually launching a super aggressive tariff target on China with 54% of tariff, and the total tariff target on China have been hitting 67%. So now the number is still small, even though it looked like a lot already, but compared to right now, more than 100%, the previous number is still small. But afterwards, after US imposed around 67% tariff target on China, China do not step back. Even China fight back, and China are combined with other countries to fight back. So after US imposed aggressive tariff target on China and other countries, a lot of regions have been suffer on it. And on 4th of April, China is actually fight back with another 54% of tariff, and other countries, including Canada, also strike back with 25% of tariff. So it's not just US impose tariff on other countries and start the war. We can notice that a lot of countries remain strong and fight back. This is what we call a trade war. So a lot of countries fight back with each other, even though it's going to harm their economy, but they don't care, they just strike back. So after this thing happens, we can be noticed that US market crashed more than 10% in 2 days. Worse since COVID-19, market have been starting to stable down after COVID-19 have been stable down, and the Fed continued to lower down interest rates, pump the economy up. So previously, the overall performance is stable, US equity market is stable, but because of this trade war issue, US equity market have been crashed by 10% in 2 days. And Asian market also crashed by more than 10%, and a lot of investors are super panicked. So according to the WIX index, the WIX index is how it normally can be used to calculate the market volatilities index. So the WIX index is actually hitting the 2008 financial crisis level. So a lot of people are continuing to panic. And now the trade war are still going to continue after US and China impose tariff with each other with more than 100%. So now we already understand things have become serious, and it's going to affect us. Every product, the prices will increase significantly. So for normal people, they might think, oh, maybe we are not going to be affected. Maybe it's just a big company like Apple, Tesla, or China company like Xiaomi or other companies going to be affected. The people might not, the farmers might not going to be affected. It's just rich people again. But the answer is actually not. Now I'm going to let you know how is this trade war is going to affect the global economy, no matter you are rich people, you are farmers, or etc., you are normal people, everyone is going to be suffer from this war. So I'm going to let you why. How trade war is going to trigger global markets meltdown. So here we do a small mind map for you guys. So you guys already understand that we do have the aggressive tariff right now. So aggressive tariff is going to cause all of the imported price to be increased sharply. So when imported price increase sharply, which means that the raw material will increase. So let me find another example for you. So if you want to build a car, you need engines, you need maybe tires, you need some of the metals for you to build a car. So imagine maybe if you are from Philippines, you need to purchase something from China, purchase tire from China, purchase engine from US, or maybe you need to purchase metals, minerals from Japan or etc. So with this kind of tariff, all of these tires, all of these minerals all of their prices will actually increase sharply. So when you want to build the car, even though you still haven't sell it, you need to pay a lot of money to different countries already. So citing that US and China, their tariff as for now is actually more than 100%, which means that all of the costs, the tire costs, is actually going to increase by more than 100%. It's super expensive. So even though you haven't raised up the selling price, you are going to suffer by just paying your supplier. So we're expecting most of the companies, they are not able to supply a lot of things because of the higher cost. So we are expecting supply chain disruptions. So imagine when a company bankrupt or the company no longer want to build a lot of cars, they don't want to build a lot of maybe iPhones or etc. We are expecting all of this, the car supply will start to be declining. So car supply declining, when you want to purchase the car prices have become more expensive. And this is something uncontrollable unless government help this company to build a car, but this is not the situation right now. So now everyone is suffering that the companies are losing the money, so they are not going to produce a lot of products. We as a consumer, what we are facing right now is all of these products will become more expensive and more expensive. And even though our salary do not increase, but the things that we want to buy become more expensive. This is what we call as a supply-driven inflation. So the trade war is actually going to cause everything, especially the raw material, become expensive, and then the companies is not going to supply a lot of things. It's going to cause supply-driven inflations. And then why is this so toxic? Supply-driven inflation, or what we call the stagflation, is so toxic. Later we will discuss more detail about what is stagflation and why a lot of people are suffering from this, and why is this going to cause the global market crash. Okay, so now give you a brief understanding about what is supply-driven inflation, even though I explained already. So supply-driven inflation arises when upward pressure on prices is caused by constraint or disruptions in the supply of goods and services rather than from excessive demand. So explain the layman's term is the company cannot build a lot of different things. So no more supply of things, things will become more expensive. So think about the daily use stuff, maybe toothbrush, a very simple example. Because of the cost of the toothbrush becomes super expensive, as a company bosses, you have two ways you are going to do. Is either you increase the selling price to cover your costs, or the other thing you need to do is you either supply lesser and hire lesser people. So these two things is going to make people suffer. Imagine the toothbrush, the daily use will become more expensive. People will be suffer on it. So this is something that happens right now. Compared to demand pull inflation, demand is different. Normally, you guys have been experienced terms what we call the inflations before, right? The CPI inflations. And during the COVID periods, after the COVID periods, inflation hit 10%, then the Fed increased the rate or decreased the rate. This is a normal situation of the inflation because it's pushed by demand pull. Consumer, the normal one, because consumer purchase a lot of things, the prices increase, then this is a normal situation. Fed can be controlling it, but if the company produce less products because the raw material is too expensive already, then this is another situation. This can cause a price increase even though nobody is going to buy it. Okay, so this is that you understand how serious is supply-driven inflations. And then normally you guys understand inflations happens, right? And then the Fed will be increasing the interest rates. And when the high interest rate happens, people will spend less money. These are normal situations. So if you guys have been the old trader, experienced trader, you have been always go through this kind of news one. Currently, the US inflation is very high. Fed Chairman Jerome Powell mentions that he wants to increase the interest rates to slow down the inflation. So when they increase the interest rates, two ways. First way is the borrowing cost will become more expensive. The second way is people will more likely to save money in the bank because bank offer you higher deposit rate. So it will discourage people to do the spending. So when no people are going to spend the money, the products that sell in the market is going to become what we call it's going to become less expensive. So inflation will be slowed down. This is a normal situation. But now it's a different story. Now it's a situation where the price of the product becomes super expensive and high inflation right now. And if the Fed wants to control the inflation, right, what Fed is going to do, the Fed might be considered to increase the interest rate. So if the Fed decide to increase the interest rate, people will be suffer more actually. Imagine if you are the bosses, your raw material become more expensive, your costs become more expensive, and then what are you going to do? You are going to borrow money from bank because you are suffering right now. And imagine even the bank increasing the borrowing rate. So you will be super suffering on that. This is what we call stagflation is going to happen. Price become expensive, and if the Fed wants to control it, they increase the interest rate, borrowing costs will become very expensive also. People will continue to suffer. So this thing is going to happen, it's happening right now. And then to confirm it, we still don't know, still haven't, because we still need to wait for further data to seek confirmation first to check whether the US inflation already gone through a super high or etc. But the previous one happens before is 1970, the US stagflation happened, and then post-COVID supply chain crisis is also something that's going to happen. So now it's something super serious. We are in a situation where the price that we want to buy, the products that we want to buy, the prices become more expensive and more expensive. But our salary increment or GDP growth of the country are not that much. So this is why we are suffering right now. And then worst case scenario, since the raw material prices become expensive, company costs increase. And from company perspective, what are they going to do? They need to cut costs. Since they cannot cut costs from raw material, the big company might be even considered to fire people. So unemployment rate will be shoot up because company want to cut costs. So this is how serious your stagflation right now. Okay. Now we also trying just now from central bank perspective, you guys already understand. Traditional monetary tools are actually ineffective against supply side inflation because even the increased interest rate, it's not going to help the toothbrush maker make more toothbrush because the problem is not from consumer spending. The problem is from the company side, the supply side. Interest rate increase or not, it's not going to affect whether this toothbrush or whether all of the products, the supply is going to increase or not. So yeah, it's ineffective. And even worse, if the Fed increase interest rate, it will become worse. And if the Fed cutting the interest rate, then we will have a double inflation. First one is you already know the supply very low, the prices become very, very expensive. The raw material increase, causing the price increase, the price expensive. And if the Fed even consider to cutting the interest rate, it will continue to boost up more spending. More spending will also cause the price become more and more super expensive. So no use. The central bank, what he's going to do is he actually super difficult in a difficult situation right now. And this is why if you guys have been noticed the recent news, Donald Trump constantly say he wants to fire Jerome Powell because Jerome Powell said he don't want to cut the interest rate. Because this is something that you shouldn't blame on Jerome Powell because he also don't know what's going on right now. If they cut the interest rate, if the Jerome Powell decide to cut the interest rate, what if the consumer pool inflations combined with the supply pool inflations, causing the main inflation rate shoot up aggressively? So this is why Jerome Powell still don't want to cut the interest rate, even though US might be enter recessions in 2025. There are a lot of uncertainties that's going to happen. But on US president perspective, Donald Trump just want to, in a short-term basis, US economy will be good. He forced Jerome Powell to cut rate off. Previously, he pressured he want to fire Jerome Powell. But afterward, he say he don't want already. He just want Jerome Powell to react quickly about the interest rate decisions. This is why so confusing compared to the previous situations where inflation high, I just increase the rate, then inflation will slow down. Inflation low, I just cut the interest rate, then I can push up the inflation. But now the situation is completely different. So now I'm going to have you understand a scenario like when trade war become a very serious, what is it going to happen? And scenario 2, when trade war is not going to happen, and what is this going to do? What as a trader you need to do? So normally when the trade war become super serious, tensions become escalations, US and China, they argue with each other again, they don't want to talk, and even the tariff imposed to 200%. In situations like this, then we could expecting some of the asset classes, including the safe haven asset, such as the gold, Japanese yen, and Swiss francs as a safe haven asset will be increased. But you guys might be wonder, normally US dollar should be considered as a safe haven asset, right? In the normal situations. But in my opinion, I don't think now dollar still maintain as what we call the safe haven asset. Because as I mentioned that the overall US economy performance is not good. And JP Morgan even forecast more than 60% the US is going to enter in the recessions. And then it also mentions about the de-dollarizations might be continue to happen if US continue to impose a lot of different tariffs to other countries. So what is de-dollarization? To understand it as a decentral bank, including China, Brazil, and several major countries, they want to less depends on dollar. So normally all of the central bank, they would require to hold dollar as a reserve, because normally when a currency drop, they will use the dollar to buy back that currency, to protect that currency to going up, because they believe dollar is something that super safe, is a safe haven asset. But recently, after the US and China relationship become worsen and worsen, China have been trying to collab with different countries, trying to launch what we call the de-dollarization, which means that they encourage these central bank lesser use on the US dollar. And they want to shift their dollar as a reserve to gold. And this is why I can explain that recently the gold trends continue to dropping aggressively. Because de-dollarization is actually going to happen right now. And then when less and less people are depends on the dollar, they will find other asset classes. So except for dollar, what is next safe haven asset? So good question. The answer is gold. So you can also notice that gold price recently almost breaking record high. Safe haven became one of the considerations as a safe haven investment. But in my opinion, the risk of de-dollarization is also something going to affect gold price to be going up. But whether this de-dollarization is going to happen or not, we need to fully focus on the trade war. For example, if the trade negotiations between US and China, they say, okay, I agree to remove all of your tariff, but you need to don't consider de-dollarization anymore. If this deal has been made, then dollar should be rebounding back and become back the safe haven asset, then gold price will be dropping back sharply. So whether this thing is going to happen or not, it depends on the negotiations. I cannot just directly give you the answer right now. But de-dollarization is something that definitely you need to go and understand it. And this is definitely why dollar no longer as a safe haven asset. You can notice the dollar trend is actually going to drop aggressively recently. So let me show you the charts. So you can see that the overall trend for the dollar is actually going to drop aggressively during this what called the trade war situations. And then others safe haven asset like gold recently continue going up. So because dollar no longer as a safe haven due to the de-dollarization risk as well as the recessions. Okay, and then but what if both countries already not both countries, US already made a trade deal with different types of country, then we could be expecting dollar will be become stabilized, then dollar will become better, because we're expecting the US economy performance will become better. And then the almost like the gold prices, the Japanese yen, CHF, all of this what we call as a safe haven investment, they will likely to be changing direction. So you can notice gold price recently continue going up because of the trade war. But if this no more trade war, then we're expecting gold price will be trying to retreat back. And then you can also notice that Japanese yen is also considered one of the safe haven asset. So Japanese yen going up. This is why USD JPY recently continue to be dropping. So if trade war this escalate already or the tensions no more, then Japanese yen will be dropped as a safe haven status. Then when JPY drop, this USD JPY will be likely to rebounding back. So this is the situations that you guys need to understand right now. I can't guarantee whether the trade war is going to happen super serious or not, but you need to understand situations like things become serious, what you should consider to invest, and things become not that serious, what are you going to do? So you're not just like looking at the news, then you just don't care. Actually, you can try to utilize the news and understand what you should do in your overall trading journey. And we don't think that the trade war is going to just end within 1-2 months. 2-3 months. We expect maybe the trade war is going to launch, maybe it will hold for 1 year. Imagine now China just delay 90 days of tariff on different country, but what if after 90 days things become worsened? So trade war is definitely one of the super important things that you need to understand. The previous 2020 is COVID-19, and then we understand Russian-Ukraine war, and then we understand about the US elections, and then the next thing is about the Federal Reserve. Then the final one, as for now, we must understand the trade war implications. So this is a preparations for you to enter the trading journey in 2025. So here, provide you further explanations. Dollar no longer as a safe haven asset. De-dollarization is something that's going to happen if trade war continue to happen. Safe haven asset you can consider if the trade war become worsen. Safe haven asset you can consider gold, Japanese yen, and CHF. If you think the gold movement too much already, you don't have enough margin or capital to try to do the gold because you can't handle the big movement, then you can try another small movement like Japanese yen or CHF. They are the same trading strategy compared to the gold. But of course, Japanese yen will also affect by the monetary policy decisions from the central bank, the Bank of Japan. But definitely now, in my opinion, Japanese yen is definitely one of the good products that you should be focused on, especially Japanese yen, because recently we do have some of the good fundamentals to support Japanese yen. So first thing is regarding on trade war is going to support Japanese yen going up as a safe haven status. The second thing is regarding on the Bank of Japan hawkish expectation or the hawkish monetary policy decision in future. Because as compared to a lot of different central banks like the Fed, ECB, Bank of England, Bank of Australia, Reserve Bank of Australia, Reserve Bank of New Zealand, all of these central banks actually mentions they want to cut the interest rate because they're expecting recessions are incoming. But Bank of Japan even have a different point of view. Previously, they even want to increase the interest rates, but because of too much uncertainty, they actually decide to maintain the interest rates. But while other central banks decide to cut it, but the Bank of Japan decide to maintain the interest rate, this is something going to beneficial on the Japanese yen. So for new trader, you need to understand the relationship between interest rates as well as the currency. Normally, when one central bank they increase the interest rates, the currency will normally going down one. So and vice versa. Okay, so when the central bank cut the interest rate, then the currency will normally be dropping. So this is another topic that we are going to discuss in future. But Japanese yen is definitely one of the things that you can be focused right now. And then high risk asset, including equity markets, crude oil, crypto, all of these assets might not be a good trading choices because this is a high risk asset. But if things become better, then all of these asset classes will be likely to rebounding back. So now I'm going to show you some of the charts to let you try to align the current situations right now. So maybe we can focus on Dow Jones first. Somebody actually asked, please check for NQ. NQ is means that Nasdaq. Is what you mean for Jave. And then now maybe we can try, I assume you are mentioning about the Nasdaq, so we can try to do some of the analysis on Nasdaq first. Let you understand what's happened to the Nasdaq recently. So you can notice that the overall trends for the Nasdaq is actually continue to be dropping. But afterwards, after a big drop, we start to have some of the rebound. Why is this have a significant rebound over here? Is because Donald Trump mentions, except China, most of the country, he is willing to delay the aggressive tariff implementations by 90 days, and he is open for discussions. So this news is actually going to boost up the risk appetite and causing high risk asset like Nasdaq to be rebounding back. And then afterwards, China imposed back another more than 100% tariff on US. Things become worse, and Nasdaq continue to be dropping back. And then afterwards, the reason why the latest one, Nasdaq starts to rebound back because Donald Trump just mentioned he's willing to have a talks with China. And then he's expecting the deal will be made if China willing to start back and etc. And China actually mentioned the same thing. China is willing to talk with US if US is going to start back or something. So after this kind of statement, both countries willing to provide the negotiations, Nasdaq rebound slightly, but we don't think Nasdaq is going to rebound aggressively unless the deal has been made. So high risk asset, Nasdaq. So you can fully explain why Nasdaq rebound back. So you can see that currently the market news hovering around the trade war. So it's not just Nasdaq is going to be affected. Dow Jones, the trend is the same. Previously, it dropped because of the trade war, rebounding back because of the 90 days delay, then dropped back because of China and US relationship worsened, and recently Dow Jones also rebounding back because of China. Donald Trump mentioned he's willing to talk with China. So yeah, and then we can also move to the gold. Recently, gold price continued to going up because of the trade war. And afterward, it's dropped back aggressively because both countries mentions they are willing to have a negotiation still. That's why safe haven asset drop back. So you can see that market, no matter you are consider safe haven asset, high risk asset, is going to hurry in all kind of this news. So I cannot say you can prepare. You can't prepare because things will happen so soon and you can't react to the market. So you can have, but all you need to do is you can set your own expectation. You just expect whether US and China is going to make a deal. If you think they won't, then maybe you can consider safe haven investment. Or if you think they are going to make deal very soon because US and China is actually super depends on each other, they cannot fight forever, right? So maybe you can consider a short position on the safe haven asset, consider bet on the equity markets. I can't promise you which will be happen first, but you need to continue, have your own expectations and try to react in the news. And of course, sometimes Q Prime do also offer trade war analysis for you guys. If you guys have anything you're not sure about what's going on that happens in the market, then here is our Telegram group. You can scan and then you can follow us. Normally we'll update all of these market news inside, and definitely the website we also will have. So can click it. So I think this is mostly all of it. Now I'm going to open for Q&A sessions about this trade war. Do you guys have anything want to ask me, or you guys have any preferred asset classes that you want me to do a short analysis for you? In Tias Ali, she mentioned the verification is so difficult in Pakistan. So I think you can feedback to your account manager. They should be able to willing to assist on you. Because verification, we need to verify nicely to make sure all of the deposit withdrawal are clear. Good. For you guys, do you have any questions before we end? If not, I think we are going to end our sessions here. Okay, I assume no questions. Then we are going to end here. Thank you everyone for your time and have a nice day. We wish you have a very, very good trading journey and be careful, especially during trade war periods. And continue to monitor on the news or follow our Telegram group. And definitely don't try to all in your money to just few trade, because trade war is something that market will be shift in just a few statements. So careful on it. All right. So thank you everyone for your time. Thank you, Michael. Thank you so much. Have a nice day.